Welcome to Before the Bell, your home for actionable pre-market content for January 21st. This is Chris Buss with Traders Profit Compass. It is January 21st at 6:16 a.m. Starting off with the futures. Bitcoin is off a whopping 9%, dropping below 40K. That seems to be a pivotal support level. So everybody's going to be watching that today. Gold down 0.4, copper down 1%, oil down 1.5%. The equity markets are, I'm just going to call it flat. NASDAQ marginally red. SPY and small caps are toggling the zero line. The big thing today is January OPEX. We've got a ton of Delta rolling off today. It's always a tricky day. We'll get into that in a moment. Over on the earnings front, not a whole lot going on. We've got Schlumberger in the oil patch and Ally Financial, one of the bigger banks out there, along with a couple of regional banks that I saw, but not a tremendously busy day on the earnings front. So yeah, we saw a big waterfall sell-off yesterday after being up about 1.5–2% on the morning push, and then they rolled that over. I think part of that was there was a 10-year tips auction yesterday at 1 o'clock. I'm not sure if that was the whole reason, but it didn't go very well. So that may have been a contributing factor, or maybe just people downright wanting to take off risk. So anyways, a very steep sell-off into the close with almost no buyers showing up. And you can see here on the VIX, we have broken above that 25 line. And what I'd like to offer to you today is have that on your dashboard and watch for simple trend today of either VIX pushing higher or dropping back below 25. I mean, we've seen in the past, here was a good example. We had a big run up into the 27 range, couldn't hold it, and ended up dropping way back down towards the end of the day. That would be a sign of confidence if we did something like that today, where there was some morning selling and then a stronger close that brought VIX back down. Now, we're going to get into the oscillators in a second, but the other scenario is a big push into 29.30 that gets rejected, and then we would be at an even higher elevated level, and we saw that back here. Now, we also had this area where we broke out and went above. I doubt you'll see that today, but hey, you never ever know exactly what's going to happen. But I view this 25 as an important pivot point in the VIX. Now, I want to move on to the oscillators because it's something that has served me well and served us well over the years. And you can see that I sent out a note yesterday saying that the selling was obviously going to push the oscillators down. Now, it didn't go down as far as I thought it might have on that sell-off, but be that as it may, we're at minus 60. So you can see quite a number of reversals at that point, but we've also got these occasions where we go down to minus 90 before we get a reversal, and this is COVID, where we actually went to 124 on the oscillator. So it's not, there's no absolutes on these indicators. all you can do is use your best judgment on how to best position for the highest probability trade. So we're at minus 60 on the NASDAQ. Let's jump over to the NYSE. And here we are at minus 65. And here again, you see minus 90 has occurred back in the past. Here was the period in 2018 when Powell said we were on autopilot rate hikes. And you'll remember that we went off 25% in a straight line, culminating, I think it was on Christmas Eve, down here at 109. And then right after Christmas, I think it was January 4th or something like that, where that Powell pivot, where he said, oh, cancel that. We're going to start easing rates, right? That big pivot. And that's when we got a launch in the first quarter of 2019. So my point here is we are definitely extended on the oscillators. From a historical perspective, you'd start to expect to see a bounce just based on the rubber band theory. We are stretched, but we're not at ultimate extremes, which I would say would happen at minus 90. And then, if it goes minus 120, 140, there's just nothing you can do about that. And my point is that when I say crash risk is elevated, that is when no oversold, no oscillator levels type things are respected. And that would be like a COVID scenario where, the rubber band broke, essentially. When you get down to minus 140, there's nobody looking at an oscillator. There's nobody saying we're oversold. It's like a panic crash. Now, when we get into the levels, I think the way to handle that is, I think you got to be really, really nimble from the standpoint of, okay, take it day to day. You can be short, but you've got to, excuse me, you got to continually roll down your stops and your strikes if we get into that waterfall mode, because the potential for a rip your face off snapback rally is highly, highly elevated. And so what I've done over here, you knew I was short all of ARC. I closed that yesterday. Honestly, I thought that on that morning type of move, okay, we're extended on the oscillators. We're seeing a surge. I'm going to close out those positions. Nice wins across the board. Blah blah blah. I don't want to sit here and sit through, a 5% bounce if that's what it turned out to be. Now, that's not what it turned out to be, but I don't want to sit here with the oscillator at minus 60 with 15 short positions out in February or March, duration positions. I can sit here and do quite well intraday or by taking short-term positions, but at much lower strike levels. So if that makes any sense to you, let's get into the charts. Here's SPY. I was absolutely flabbergasted that there was no bounce, nothing at 450, which were our prior lows here. I thought that would have been a perfect place to have the bulls step in. Okay, we back tested these prior lows. Now give it a bounce. And they rolled it over and went right through that level. So I thought that was significant. Now with OPEX being today, right, there are probably forces out there that don't want to see this go any farther. But as we've already seen, if the mob wants to sell, there's nothing a market maker can do to arrest that move. It's just too powerful. And that's when you get into this, waterfall mode. So we've got to be open to a move even lower. We saw in the oscillators, hey, we can go minus 90 if they want to, pull the rubber bands to extremes. So our next level below is 442.5 right here. And then we've got the 200 down at, what is that? 436.5 right down here. So those are our next two levels. And here you can see the morning push. And now I'm talking from a trading perspective. We got up to this prior high at the top of the prior gap, and that's right where it rolled over. From a trading perspective, you could have, and actually we had a reach up all the way up to this 459 level. A rejection there was your first hint that sellers were coming in. Your second hint was the loss of the top of the old gap. Your third hint was loss of the bottom of the gap. Your fourth hint was coming back to fill the morning gap. And then your fifth hint was loss of the prior day low right here at 452. So there were a lot of opportunities in the afternoon to get on the short side of this if you're a nimble trader and, ride this thing down. And so what I would be thinking today is just gear everything around 450, right? Maintain those TA principles that if the market is able to rally price and recapture 450, then you've got a level to shoot against on the long side. If there's some kind of a rip today, right? You reclaim that level, and if it looks strong, you can get long and look for a push. If it can't, if there's a rally that brings it up, it's not going to be much of a rally, but if price can come up to this 450 level and it stalls, or up to 452 at the bottom of this prior low and it stalls, those would be objective levels to get short. And maybe they just take it lower into the weekend. Remember, we've got weekend risk. And what we always say is that going into the weekend, those last 2 hours of trading, and today there'll be a fine point on it because of the OPEX, right? So are people getting out of their shorts? Are they covering? Enough is enough? Or are they pressing the pedal to the metal on the short side and saying, you know what, I am not going to face the weekend risk of, walking in like we did last Tuesday to a big move down. So I'm just going to, discretion's the better part of valor. I'm going to get the F out and, sell out and then see what happens. I can't tell you what's going to happen, but I can tell you from a technical perspective, below 450 is going to be bearish, and a reclaim of 450, while not necessarily bullish like we're going to rip, but above 450, the selling has been contained at a key technical level, and I still maintain it would be the way of the market to park price at a level where everybody's guessing. So you can't always count on that, but I wouldn't be surprised if somehow, some way, they figure out a way to park this thing at 450, and then everybody can guess over the weekend. Okay, here's the cues. Morning reach up candle, then they rolled it over. I was surprised that they didn't bounce it at the 200 at 364. They didn't bounce it at the top of this gap, so now we're below. Here, I think it's real simple. Gear everything off of 364 and the 200. As long as price is below the 200, there's no reason to try and get too cute with a long idea with price below the 200 and potentially falling. Looking down below, we've got a gap fill at 360, and then we've got these prior lows at 355. I have no doubt that at some point, now that we're so close and we're below the 200, that they could or will eventually come down and test these lows at 355. We've had that on the board for a long, long time. I just thought that there would be some technical support at the 200, and we just didn't see that yesterday. So let's zoom down to the 2-hour chart. I mean, if you were calm and you kept your wits about you, there were some trading opportunities. Now, I don't have it in here, drawn in here, but here was the Wednesday close, right? And we had an open gap right here from the Wednesday close to the Thursday open. We came up here. We had a level at 372. We reached up towards the gap, and then we started to roll over. Your first opportunity to get short was a move back below 372. Losing a level from above is bearish. You come down. Your second opportunity is moving into the morning gap right here about 369 and a half, give or take. And your third opportunity was a break of this support level and the prior low. You can call that 366. And then we finished near the lows after we broke this level right here. So I think at a minimum, you want to see price recover 364, which is the 200, and then recover 368, which is this line of support that we had going into yesterday. So really, really weak technical action, even weaker technical action on IWM. I think this one is in real trouble. We've been saying it for a while. We have been saying actually up here, and it happened, this big fake breakout, moved back into the box. We tested it a couple times here, went up and then rolled over. we found the bottom of the box at 210, which has been yearly support. I mean, literally going back a year, and then that failed. And then once that failed, we said you want to be short against 210. Fine, that's what we did. We're below all the moving averages, well below the 200. So this thing is really in a big bearish posture. Why? You've got really negative slopes on all the EMAs except the 200. The 200 is starting to bend down. You're going to have the 50 below the 200 here shortly, maybe today, maybe Monday. I don't think there's anything price can do to stop that. And then you'll have the full bearish stack. 200 EMA on top, then the 50, then the 20, then the 8, and then that's your full bear look on EMAs. So we had really, it was a gift yesterday, and we were talking about it in the trading room, the move up towards 209, 210 that failed. And if you had a 5-minute chart or even a 15-minute chart that you were going off of, there was a line of resistance at 209. And I posted in the room that rejection there. And of course, you don't know that it's going to waterfall when you say, oh, it's rejected. All you can do is take that objective short with a stop just above and see what happens, and then you get the waterfall, which was great if you were short, and you take it from there. Same idea. We had these particular levels marked, and then your opportunity to short. You had first of all, you had overhead resistance, then you had a move into the morning gap, then you had the break of the prior low. So whenever you, again, lose those levels from above and make a new low, then you should be short. So the next level below that I have as support is 197. And remember that our measured move target is 190. So all of a sudden, we're halfway there. We've gone from 210 down to we tagged almost 200 yesterday. So we've made half of the measured move in just a couple of days. Before we get into Fatman, I want to welcome any new visitors to the YouTube channel. Here you're going to find a lot of technical analysis and objective levels for you to create some highly objective trades where you can work on your execution. If you like that type of analysis, please hit the subscribe button, the alarm bell, the post notifications, the like button. That would be great. Also, please leave a comment on either tickers or sectors you'd like me to cover. I am certainly happy to do that. I'd like to see some more engagement on the channel. Pass the link along to others in your group that the work may benefit. I'd really appreciate that. And then what you can do to take the next step is jump over in the show notes where you'll find a link to the blog site where you can drop in your email address and register for all my content, join the team. Then you'll get all my content morning, noon, and night. And you'll also get an invite link to the trading room. And what I always tell everybody, even if you've got a full-time job and can't participate during market hours, jump in there after hours. There's usually somebody in there doing something. Or even if not, you can scroll through the day's comments and find tickers and ideas from the members in the group offering observations about the market and setups that they see, and then you can take from it what you will, and hopefully that'll stimulate some ideas at your end. So that would be great if you join the team. Okay, Facebook. Still below the trading range at 325, 324 area. We're coming down to an intermediate support level at 315. I think if it breaks 315, you're going to come immediately to 305 and potentially test the bottom of this support band at 300. If we look at the 60-minute chart, I mean, honestly, it was easy trading if you look at the chart. And I know they're always easy after the fact, but in real time, we had a level here right at 327. And if you've been following along the channel, 327 is a number that has been coming up a lot over the last several weeks. On the other day, we had a reach up to 327, that it was rejected, then it rolled over, came right back down to this level here, about 319.50. Yesterday, we had a gap up, went right back to the same level, and failed again. I mean, when you've got, number one, you've got a big downtrend resistance line. Number two, you've got proven overhead resistance at the prior level at 2710, and then you get another push into that level that stalls and fails. So you get short with a stop above, knowing that you've got downtrend resistance as a backup. So a big upside move is, is probably not going to be impulsive at that point. You're going to hit some resistance. So that's a comfort, knowing if you're short, any potential damage is going to be limited. Plus, you've got a stop up there to begin with. And then, of course, you never know if it's going to waterfall, but that's what you got. So that was your first entry. Your second entry was when 324 failed. And that number's come up again and again, the bottom of this gap. And then your third entry was break of these prior lows here. And then you got to move down to 316. We talked about that level yesterday as a test of the prior low. So today, your pivot is 316. 316. Anything above stops the bleeding. Anything below, I think you roll down towards that 308. Let's look at it again. What was that level? 305 level would be my target, and then that would target these prior lows here. Let's move on to Apple. Lost the 50. We had a little attempt in the morning to break above it. Then it fell back below. And now we've got an open gap below as a potential bounce area off the top of the gap. Then off of the gap fill against this support zone here. Let's look at it zoomed in on the hourly chart. Here was the morning candle. Again, I mean, this is technical analysis 101. You got an impulsive move right up to the old resistance level at 170, where it failed and rolled down. And so, okay, you're looking at it. Darn it. I went to the fridge to get a Diet Coke, and I come back and it's rejected. I missed the entry. Oh my God. No, all is not lost. You don't get pissed off. You look for the next opportunity. And the next opportunity was a break back below the 50 EMA and the top of the gap right here at 168.5. And we actually saw the day before the same exact move. So you get short right here at the top of the gap, and then you get the waterfall. And right here, taking that entry, all you were looking for is a move back to the prior low, and then you got a bonus when that level broke. So today, your pivot is at the top of the next gap at 164. The width of that gap is 162. So that's your pivot for today. If they can rally it, get back above 166 and break that level, then that would be, short-term bullish. But they've really got to get it back above the 50, right? They've got to show some resilience and power to get back above the 50 to kind of stop the bleeding. All things being equal, Tesla had a really good day yesterday. No, it didn't hold. It did not get above the 50. No, it didn't hold its morning gains, but it held 1,000, held the trend line, and so we just do a reset on yesterday with not a lot of changes. Right here at 1,000 being the pivot. Above 1,000 keeps the bulls alive. Below 1,000 opens the door to those lower levels that I showed you on the daily chart, 970, and now there's a gap below as well. Microsoft, same candle as Wednesday. We had a big move up into 313. Actually, this moved a little higher, but we had this level at 312 and a half against the top of the downtrend line and lateral resistance. So you had two layers of resistance, and then it failed, rolled over, went into the morning gap, and closed on the lows. So from top to bottom on that candle was essentially $10. I want to show you on the 60-minute chart. I know we're down here in the corner of the chart until it retests or resets this morning on the open, but here was the morning gap higher. We went up, put 3 candles on this downtrend line, and then broke decisively below this 310. And then actually in the trading room, we talked about getting short against 309. That was another level on the 5-minute chart that seemed to be important. And then your next opportunity was a move into the morning gap, and then you got the gap fill closing on the lows. Now, what I want to point out is this whole structure here. Falling bullish wedge with bullish divergence. So even though we've been falling, PPO and RSI has been rising. Now, does that mean pile in long? No, because if there's more selling, these trend lines will break. But the cocktail is there for a move higher if it wants to. And what I would say is, well, on a short-term basis, recovery of these support lines will be bullish. But if we get a breakout, like a nice breakout above this trend line, like above 308, 310, then I think we'd have something to really work with on the upside, especially above 310, that would take out these highs here, and that might open the door to 319 at this high and these lows. That will be a really, really important level. So keep that in the back of your head and in your narrative. Amazon, I've been saying for a while, we're going to the bottom of the box. Yesterday, we got a decisive move below 3,100. That was really the last stop for the train. If you were going to, get short, and a place for the bulls to get off, because there's really nothing below to really stop it going to 29.50. Now today, 3,100 remains the pivot. If it can't get above that, then it's just going to go right on down. The bulls would have something to talk about above this 3,100, but very bearish posture. And here you can see at the beginning of the day, we had just ever so slightly of a green candle, and then we had this 3,150 area as these prior lows being support, and then it fell, and you got, what'd you get? $125 move from 3,150 to 30.25. So $125 move ain't all bad on a Thursday afternoon. Google, we had the measured move from the ABC move. We've got the 200 right down here at 26.25. In my mind, the bulls got to recapture this level here at, give or take, 2,700 to get back on the right side of this. But you'll notice that we've got some steep declining moving averages, and then we've got the last stop here at the 200 at 26.25, and then a little gap below. So it's all hands on deck for the bulls right here to get back above 2,700. Netflix, you know what happened last night. Down, what was it down? $115. Went from 515 to 400 in, 10 seconds kind of thing. If you got that, if you threw a dart, you're waking up really happy today. Congratulations on that trade. As I mentioned yesterday, I'm stepping aside. So, I'm not involved in this. We'll pick up the dust, let the charts reset. Nothing I'm going to take on a Friday afternoon. I got to let this settle out a little bit. Now, if you're an active, super active trader, there's going to be a massive $100 gap above in price. And if everybody decides that this $100 move was overdone, you may get a nice rally there. SMH, bad day at the office, another 3%. We've had basically 3+ % days, and now right through this gap, no bounce at all. We've got the level here, 275. Notice this was a prior breakout level, so that's support, and you've got the 200 right below. Remember, we said on the break of 290, we said 270 was our measured move target, $20 range, $20 from 290 puts us at 270 and the 200. So that is our target. Today, I didn't move the pivots, but today your pivot is 275. Anything above that stops the bleeding, and really too far to go to really get this thing bullish. Again, there were some very tradable setups, and there are days that are just, frustrating as hell, where a level is not respected, and you just fight it all day. Here was another instance that if you were watching it, it turned out to be a super simple trade. Why? We finished below. Well, we were below the 50, and we've been talking about, leaning to the bearish side the whole time. So we got a couple candles right into resistance. We had prior lows back here. We had a prior low here. We had support here. And then we break down below support on Wednesday. We make a move right into that level, never take it out, and then it rolls right over. Even if you didn't do anything until the top of this gap at 283, where did it end? 276. That's $7 in an hour, right? 283 to 276. That's $7 in an hour. So even if you were, saying you missed the first half of the move, you take signals when they come and you're not thinking about, wow, what might have been. You stay in the here and now with a calm presence of mind to say, hey, I just entered a $3 gap. You don't know that this is going to happen, but hey, even if you get a $3 move, that's a nice win in the final hour of trading. So on these moves, stay calm, stay poised, remember your TA principles, and I think good things are going to happen. So just to recap for today as we wrap up the video, January OPEX. Make sure you take care of anything you got expiring today so there's no surprises in the morning. Number 2, watch those last 2 hours of trading. They will say a lot about risk sentiment heading into the weekend. Number 3, oscillators are extended to the downside but not precluded from going lower. So if you get into a waterfall or even a selling day, keep your stops tight, roll your stops down, go to the bank early and often because as that rubber band stretches, the reaction going the other way will be that much more violent. And don't get caught with 15 positions short when that happens. That's how people get their faces ripped off. So be real careful out there. Very tricky. Hope you're doing well. If you need help, reach out to me. You know how to contact me, either in the trading room. You've got my email address, chris@tradersprofitcompass.com. Reach out and I'll do my best to help. So this has been Chris Buss with Traders Profit Compass. Have a good day of trading and talk to you next time.